are live. Gary, thank you for joining us today. How you doing?
Great. Thanks for having me, Gabe.
Absolutely. Why don't you get us started? Tell us, who you are, where you're from, and how you got started in real estate in the first place.
Yeah, I grew up in New Jersey, been out here in LA 20 plus years, always been an entrepreneur, even as a young child. So I knew how to run businesses. So obviously, and when I started out, I didn't know how to do it well, but over time you learn from mistakes and gaining mentors. And that really served me well when I got into real estate full time. I started investing 2002, just with my value add single family homes that I own and then kind of upgraded and turned into a rentals, and then started investing in multifamily. And I found out that was kind of my true calling, because I knew how to run businesses, and that's what multifamily is about. It's like almost like a mini franchise. Each property you own, is run by a third party property management company. You asset manage it, but you can have many of these if you could build up to it.
Nice. That's great. So you got started in single family way back when, 2002, on the upswing from the previous growth period. And then sounds like you probably went through 2008, and you went from the single family into multifamily. And since then you've been going straight to the multifamily and haven't looked back since. Is that about right?
Yeah. So I started investing in other people's deals first, so I can learn what they're doing right, what they're doing wrong. And as I was, gaining more education myself. So once I did that and I felt comfortable, then I started doing it on my own, and then I started partnering up, and that was a big piece of rocket fuel for me, because as an entrepreneur, you find partners, but you want to keep it yourself. And so once I realized real estate is a team, and we partnered up. We took down a $1.7 million deal, and then we expanded our team and took down a $15 million deal. We wouldn't have done it if it was just by myself, or if it was just one other partner. So team is so important in real estate.
Nice. I love it. I want to kind of unpack that as we go forward. But before we do that, I like starting out just to really understand what it is you do today in the modern day. So kind of take us through, you've already mentioned asset management, multifamily. Kind of take us through what your business is like today, what the bread and butter is.
Yeah, value add, C class, B minus. We focus on Phoenix and Tucson. I have some investments in California and Texas as well, but the markets that we're doing multifamily is that area, so that we're not doing the shotgun approach where we know a little bit about all the different markets. We'd rather be an expert in a couple different markets, and that's not to say we won't do a deal somewhere else, but we'll partner up with someone that really knows that market.
Gotcha. So how did you kind of come to decide on Phoenix and Tucson?
A lot of reasons. One, it's the population growth and job growth has been phenomenal in Phoenix, particularly, and in Tucson as well. Really became they changed that whole market after 2008, when the downturn hit. They took a dump, and they're very business friendly. A lot of tech companies have been moving there. A lot of people from the West Coast are moving there because it's cheaper to live there. Again, the business friendly environment. So there's a huge migration to those areas. So and for us, it's close to get to as well. So if we drive, it's 5 hours. If we take a flight, it's like an hour. So we love that market. Very similar to the DFW area, which has been booming as well. But for us, we can get to Phoenix and Tucson a lot easier, and a lot less players in Tucson as well.
Makes sense. So you mentioned that you guys focus on C-class value add. So you're in the lower socioeconomic areas, and you're looking for properties that need some love, right? Is that?
Yeah, absolutely. If I see a prospectus for a property that looks pretty nice. I'm like, not for us. We want to do that value add so we could boost the returns for our investors. Yeah, we'll look at some B class as well. But we want to make sure all the trends are going up. So that C class neighborhood, hopefully will be a B class in a few years. We're looking for declining crime, population growth, job growth in that submarket, because it's so important. Phoenix is huge. So you really got to look at the submarket. One of the tools we like to use is Neighborhood Scout, so we can zero in on a pretty small radius and see what's going on there.
Awesome. I love it. I kind of want to unpack that just a little bit. I mean, you already mentioned one tool, Neighborhood Scout. I use that myself, but I've struggled to kind of identify trends. So you mentioned trends, like you're looking for kind of a lower end neighborhood, but you want it to be trending upwards. So how is it that you go about figuring out which areas that are lower class now will in the future be, more B area?
Yeah, so part of that is in Neighborhood Scout. They'll have some ratings, but it's not the end all be all like anything, because sometimes they'll have stuff that they might not rate as well. But when we're looking elsewhere at all the other facts, we feel that it is an uprising neighborhood. So we'll look at surrounding there too. So our last property called La Casa in Phoenix is pretty close to Tempe and Scottsdale, and as those prices rise, people are getting pushed out and getting pushed to where we're not too far from there, and they'll be moving into our area. And
Gotcha.
So that's part statistics, that's part talking to the property management, that's part of us doing the comps as well, and seeing, if you go 2 miles that way, the rents are $1,800. Then you come maybe a mile and it's $1,600. Then you come to us and it's $1,200. Well, maybe we could be at $1,400. We also look at what's developing in the area. So we have a charter school getting built pretty much right across the street from our building, which is fantastic. There's a new development, massive development. I think it's going to be a data center right down the street. Another property, it was a B plus, just sold for 50% more than what we paid for our property as well. So you have to look at these things and pull them all together. So it's not one resource, but when you do your homework, it's not foolproof, obviously, but it helps paint a picture for you.
Nice. No, I like it. So kind of to summarize what you just said. So when you're trying to identify an area that is currently lower class, and you're trying to identify the ones that are going to be moving into a better status economically. So you look at current development that's going on in the area, and you're looking for areas that are next to more high value areas themselves. And then you look at the comps and the Neighborhood Scout as well, in addition to, just kind of the real speaking with people in the area, speaking with the property managers, things like that. Does that sum it up pretty well?
Yeah, absolutely. And you can't do that unless you're visiting these properties all the time. You can't be an expert in everything. So we're there all the time, looking at it, different properties, seeing all the trends. That's the only way you can you put yourself in the best position for this.
I love it, and that's a big reason why people find more success when they're investing in the place they live, because they know it more than if they were investing out of state. So I love that. So kind of going back to your business itself, you've kind of gone over how you identify the location. So how do you actually find the property itself? I mean, when it comes to investing, the first stage is just finding the property, and it's oftentimes the hardest one. How do you go about finding those properties?
Relationships. You've got to, emails are great to start off with a broker. Phone calls are better, and then in person is even better. Having a coffee, going to lunch, having a beer is even better. If you could spend some time, we sometimes will have looked at properties that we really don't have interest in buying, quite honestly, but if we can get a little time with a broker, it's worth it. And you tell them the properties that you're most interested in and that you can close, and you try to sell yourself a little bit, not too much, but you're building a relationship. You're finding out what that person likes to do. And so you use that in your next conversation. So you've got to build that relationship with the brokers. There's a lot of people that are hustling for deals. So you've got to find a way to separate yourself somehow.
Nice. I like it. And you're not the first person that said relationships is one of their main ways of attracting new deals. And so it sounds like, obviously real estate is a very relationship centric business. So you got to get out there, you got to meet with the brokers. And it sounds like it's no different in the multifamily area as well. So I want to move on just a little bit here, and I know you're talking about multifamily. This is your main bread and butter, but I also know you do meetups as part of it. Sounds like your relationship strategy. How did you get started with meetups? And if somebody were to, well, first, what have you kind of found has been the benefit of being the meetup organizer, and then if someone were to want to actually start up their own meetup, what pieces of advice would you give them?
Yeah, starting a meetup gives you a platform to build your brand, and it gives you an opportunity to kind of talk about what you're doing. So it's really important. It's a slow build. It's not like, we were lucky. We started off with probably close to like 40 people the first time, but because we joined MFM, Multifamily Masters, which we had a few in LA. So and LA is huge. So it was a good way to get us going. And obviously it was a little over a year ago, but man, I think there's been double the amount of meetups since then.
Yeah.
So it definitely gets saturated fast, but having a platform, bringing on experts, I'm not doing it all myself. So I brought on lenders and legal and people that do self-directed IRAs, and we talk about underwriting. So you're educating people, they trust you, and they start investing in your deals, quite honestly. But you have to provide value. It's not a take, it's a give. And then, maybe they introduce you to someone that knows of a property or wants to invest or whatever. But you got to add value. And just start, just say you're going to do it and put some time. It doesn't have to be so overwhelming in time, but you have to be consistent. You've got to stick to one date every month. You can't keep moving around the location, although we've had to do that sometimes, unfortunately, but you've got to be consistent. And obviously now with COVID, we've gone virtual. So we've just combined our meetup. So I run a downtown LA and also a Phoenix one because we're there all the time. And then my business partner, Kyle, runs a Long Beach one in Phoenix with me. So we just combined the three and been having a super meetup every month of late. So that's been a lot of fun, and trying to make it as interactive as possible. So we'll do breakout rooms and whatnot. So there's networking involved as well. That's really important to any meetup, as having that networking component.
Yeah, absolutely. I used to go to a meetup pretty religiously, and I got a lot from it. I'm sure the host got a lot from it as well. And it was, I started when I was relatively new in investing, and so just hearing from the people standing up, giving their spiel on how they got started, what the deals they're doing, it really helped me out as well. So I appreciate the people that put on meetups. From the outside looking in, it looks like a lot of work. So I applaud you for that.
And that's how I also found my business partner, Kyle Mitchell, a little over a year and a half ago. We were attending the same meetup. Hey, I'm going to Phoenix. He said he was going to Phoenix. It's pretty boring driving out yourself. So let's go together. And during these 16, 17-hour days of driving out there, touring and driving back, you develop a relationship and said, hey, let's start doing deals together. So you find a lot of great contacts at meetups.
I love it. All right. So I want to kind of shift gears just a little bit. We've talked about meetups. We've talked about your multifamily business. So you also you're putting on a virtual asset management summit. Tell us just a little bit about that. What can people expect in that summit itself, and who is this for? Like asset management is it's different from people who just want to invest in single family. It's more focused on the business of real estate, and so kind of give us an overview of what that is.
Yeah, there's a lot of gurus out there and educational programs out there that get you to your first deal. But there's not much out there, if any, that really, okay, once you've got that deal, what do you do next? And Kyle and I had that business experience and we felt very comfortable, but heck, we'd like to learn more. We want to teach others how to be successful because we see other asset managers flounder during this time. It's all the work. It doesn't. You don't start paying attention now when things go bad. And certainly, it was easy to make a lot of money in the last 5-10 years. But going forward, cap rates are shrinking. What do you need to do? And that's why we started this summit. And we have a ton of great speakers from Neal Bawa, Brad Sumrok, Joe Fairless, Brian Chavis, Michael Becker, and the list goes on. So a wide range of topics, and we want to educate those that are interested in being expert asset managers.
I love it. So kind of take us into asset management itself. If somebody were to want to buy a multifamily, 10 plus units, I guess 10 is kind of on the low side, but a large multifamily asset, what are the keys? I know this is a very deep topic, but if you were just to kind of summarize it in, the top 5 takeaways that are really important when it comes to managing a large asset, what would those be?
Well, you've got to set up your key performance indicators, KPIs. So because you've got to measure the success of the property. Each month, you want to have more net operating income than the month before, for the most part. In the beginning, you have your value add. We'll always underwrite that we're going to take a dip in the first couple months. Could be the first year we go, our income backtracks from the previous T12 because we're renovating. We're going to have more vacancy, but you've got to track that. You've got to track all your expenses and making sure on a month-to-month basis that you don't have any drastic spikes. If you're using a third-party property management company, just because they are the expert doesn't mean they're not going to make a mistake, and you have to stay on top of it. I mean, we've seen charges to our property that weren't ours, and we really like them, and mistakes do happen. They're managing a lot of properties. So you got to measure everything. You've got to, just because you have a business plan, you've got to stay on top of it all the time and potentially pivot. I mean, we've pivoted off of our plan a little bit. We had a backsplash, $500 that we would do. We backed off of that because we thought we didn't really have to go to that level for the renovation. So you're constantly watching what's working, checking out the comps and manipulating that along as you go. And then you have to continue the conversation with the broker. Where is the market? Has the market skyrocketed? So on one of our other properties, we were working on our disposition only 6 months into our purchase because the property was doing phenomenal. So, we met with the broker and say, hey, we bought it at $39,000. Our net operating income is through the roof. We keep raising rents. We did our value add plan, so we started implementing a higher end renovation because you're going to want to create that value add opportunity for the next buyer. So you're constantly monitoring everything along the way. Maybe you're helping with the marketing as well. It's just because you have a property doesn't mean, oh, it's all done and that's great, I could sit back and relax. A lot of people do that. And, if that's good for them, that's fine. But for us, we want to maximize our revenue, maximize the return for our investors. And, that is strong asset managing.
I love it. It sounds like I think you're definitely right. A lot of people will buy a multifamily and just kind of let it go. But that's not looking at it as a business. It's just looking at it as a structure. So asset management really at its core is running it as a business. You mentioned you have to track KPIs and pivot when things don't go as planned. And so I like those two. KPIs are definitely a hard thing to identify, but super necessary when it comes to figuring out how your business is actually performing. So I love it. So I'm going to pivot one more time here. We've talked about, what you're doing out there in the field. Now I want to hear a little bit about your stories that you've already been through. We all know real estate, it's a roller coaster. You got your ups, you got your downs, both emotionally and financially. So kind of take us to a low point that you've had in real estate, and tell us, what was the main lesson that you learned from that one?
Yeah, I'll take you through the last deal because we went from a $1.7 million deal to a little over 15 million, and I mean that's a huge jump.
Yeah, jeez.
Yeah. So, but you've got to be optimistic. You've got to be persistent because there are many times along the way that the deal could have fell apart. So we first off we worked on an LOI and got it done, and when we got the contract a week later, it was completely different than the LOI, and we're like, what the heck is going on here? So we called the broker and asked him to like work with the seller and their lawyer because they're obviously not talking, and we thought maybe the deal was done. We were really shocked, but finally we got to where we basically were. Took probably 2 weeks to do that. Usually you can get a contract done within a week because the LOI is basically the contract. Then when we did our due diligence, there was they had been stuffing tenants, and some of the things didn't match up right. And again, we went back to the seller and said, hey, based on some of these things that we uncovered, it's not the deal that we expected. In order to move forward, we need to be at this price. And again, we thought the deal was done because they didn't want to budge. And finally, we found a middle ground. So you've got to throw emotion out of it. You've got to stay even keel. And for us, we wanted the deal. It would be a big jump for us, but not at the risk to our investors. Not at, it had to make sense. So you gotta keep it cool. You gotta be optimistic and keep grinding away every day. And if it was going to be another deal, so be it. But it's definitely highs and lows, and you got to try to stay as much as you can in that middle.
I like it. So you got into a deal. You'd already created your letter of intent, and you thought you thought that both of you guys were on the same page. Turns out that was not the case, and so you just had to keep pushing through. Multiple things happened. It turns out that it wasn't lining up. So the lesson was keep pushing through, keep being persistent. It's never gonna, and I know this for myself. It is never. I don't think I've ever just had a deal happen where it was exactly what it appeared on the surface level. So I mean that's great advice in and of itself, is just do your due diligence and pivot when things come up, because they will. It's never going to be exactly what you think it is. So I like it. Great. So that's the trough. You just had a deal that was kind of it wasn't what you expected. So now take us to the peak. Why are you still in real estate? Why do you love it? What gets you out of bed?
I love the action. I love helping others make money, build wealth. It's creative. It's business. It's working together with other people to solve problems. It's improving communities. There's so many things involved in real estate. It's never a dull moment. It's a lot of fun, and I love looking at something and kind of figuring out, okay, what are we going to create out of this? And it's never smooth, but that makes it interesting.
All right, I love it. All right, so shifting gears one last time, we do try to keep these at about 30 minutes, so we're running up to the end here. So going back to yourself back in 2002, the Gary that was just starting out, and kind of take us back to, if you were to go back to that version of you, and give that person one piece of advice going forward in real estate, what would that one piece of advice be?
Find a mentor. I waited a really long time to find a mentor, and being around like-minded individuals, because that gave me rocket fuel. Talking, learning, seeing what other people were doing. If I started then, man, my net worth would be probably 4 times as high as it is now. So don't be afraid to start, get a mentor, start, getting involved in meetups or conferences or whatnot. Be around like-minded people.
I like it. And I mean, this is a plug for you, I guess, but meetups, I can attest that meetups are a great way to find mentors. So if that is something that in your current real estate journey that you're looking for, definitely go to meetups in your area. You'll be able to, connect with somebody that will kind of show you the ropes there. So Gary, thank you very much for coming on. I know that I can speak for everybody listening and watching that we appreciate you sharing your knowledge here. If someone, we all need things. So if someone were to bring you something, what would you want them to bring you?
Yeah, if they have a great deal, let me know, but you've got to underwrite it. People have sent me deals before and they had no idea what, they haven't underwritten it or anything. Or if they want to invest, shoot me an email. I can be reached at glipsky, LIPSKY @aptcapitalgroup.com. And our website for the Virtual Asset Management Summit is amssummit.com.
Is it amssummit2020.com,
Yes.
correct? Okay. Perfect. And that was the next question, is how people can get in contact with you. So everybody listening and watching, you just heard his email. You can reach him there, or I will put his LinkedIn in the show notes here. If anybody listening wants to get involved with the Asset Management Summit that him and his partner Kyle are putting on, who we had on the show just a couple weeks ago, check out amssummit2020.com. And you can check it out there. So yeah, Gary, thank you very much. And for everybody listening, watching, thank you for sticking around. And we look forward to seeing you on the next episode. Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.